Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.4% today. I'm going to spend today just talking about what we're doing about this downturn because we've had a pretty consistent downturn ever since the Federal Reserve came out and spoke at Jackson Hole, and getting some questions about it. So let me answer that. We have a plan. We basically have a series of triggers built around every single position that we have. And what we try to do is have some kind of customized triggers. For example, something in an IRA, we might move sooner because it doesn't have a tax consequence or even have to be reported, versus something outside of an IRA that might have a tax consequence. We give a little bit looser trigger on those, et cetera. So can never tell exactly where the market's going to go, but we want to be able to kind of gather up some of that principle and put it in some safe places. Right now, we're using a lot of Treasury bill and ultra short-term bond ETFs as our holding spots as these triggers happen. And so we've been doing that. Here's how it kind of works. As those triggers happen in the IRAs, we do them. Outside the IRAs, we have a lot of positions that people like. We call them legacy positions, something they've had for a long time. Maybe they inherited or what have you. Those are being left alone at the moment. We do keep watching those to see what happens. But then we have some gains, big gains in some of these positions. We're not taking those. We're going to take potentially some small gains, and we're obviously trying to capture losses. We took a lot of gains at the beginning of the year, and so now we're trying to write off some of those gains with some losses that we can capture here. It's the only good thing that really comes from this as far as that goes. So, and I know some people sold homes and different things along those lines, and we might be able to offset some of that, gain with some losses that we can capture as far as that goes. So, we have triggers to get back in if things get better. And most of what we're selling is kind of the periphery things, the targeted indexes and some of the other pieces that we've been holding on to for a while that have just had, bigger gains. And the core pieces, which are our bigger holdings, Vanguard S&P 500, the Vanguard Total Stock Market Index, those types of things. Some of these big bond pieces like the Vanguard Total Bond Market Index, we're actually holding on to those. We're very close to getting some triggers on those at this point in time also, but we have decided that, one of the things we are going to be waiting for here is to see what happens with the inflation number. The CPI number comes out in next week, and then the week after that we have the Federal Reserve meeting. So unless the market really falls apart before then, we'll probably wait to see the results of those, see how the market responds to those. I'm thinking that the CPI number might come out to be pretty decent and continue to show a decrease in inflation as far as that goes. We'll have to see what happens with the Federal Reserve meeting. So again, taking some risk off the table, trying to do it in a measured approach. We started this about 8 days ago, just kind of slowly but surely taking pieces off as those triggers came and trying to, protect. It's worked out well so far since the market has come down, but we don't want to ride this all the way down just because, again, we're on the edge of this cliff, and we could be fine, but the risk is much higher right here than normal. So we want to be able to kind of put a parachute on, and that's what these, T-bill and ultra short-term bond ETFs are, is just a parachute so that we have something to use if the market does come down, to then be able to come back in at a lower point. If the market takes off, we'll get rid of those and go back into our kind of our normal models. This is just typical of a rolling bear market. This is a lot like what happened in 2008 in terms of that downturns that are happening. So, we'll see what happens. We're still, very much so in the market, but we have reduced some of that exposure, and we'll continue to do that as far as that goes. And so that's what's happening. That's what we're doing. Obviously, if you have any questions about that, you can let us know. But look forward to talking to you tomorrow and see what happens then. Thank you very much.